Hey everybody, welcome to the Chapter 3 case assignment. So in the future, I won't have videos of these case assignments because we'll have you just working through these on your own. It's kind of a, I guess you'd call it like a test or an exam to show what you've learned during the chapter. But it's not really an exam. You can use notes, you can use your book, you can use the internet if you want to Google something. Because in real life, when we do accounting, we always have resources, right? We don't have to like remember everything, and thank goodness, or else I wouldn't be much of an accountant. It's nice to be able to look things up when you need to. Anyway, so I just want to kind of show you how we'll go about doing this, and then I'll work through this first one for you, so you can just follow along if you want to, and then starting into Chapter 4. There won't be as much video content for these assignments that come at the end of the chapter. So like I said, they're called the case assignment. So here I am at the end of Chapter 3, and I'm on Chapter 3 practice. And there's the questions, which we're not going to do, and the matching, which we're not going to do. So we're going to do the cases, and we're just going to do one case, okay? And we're going to continue that case through the whole course. And it's called case 1, okay? So we're going to follow these steps, open our internet browser and go into it, and then type in your user ID and password, and that's going to get you to the account that you created back in Chapter 1, and that's where you're going to do these case assignments. So I'm going to go ahead and bring up that account so that I can do this work. There's my QuickBooks account. I'm actually in my chart of accounts already. Yours would probably come up in the dashboard like this. Okay, so again, I'm just going to kind of walk you through this first case, and then after that, in the future chapters, you'll go through them on your own. So you'll notice in the case that rather than give you step-by-step instructions of what to do, now it's just telling you what to do and leaving it up to you to actually do it. So it's more like real life, right, where you would have to work that out. And so the first thing it's going to have us do, so I'm in step 1, it says modify settings as follows. So remember from the walkthrough that you modify settings by clicking on the little gear and clicking on account and settings. And that will bring this up. The first thing it wants us to do is to change our company name, which I actually already did. But like if we would just click on the little pencil over to the right, and then you can put in whatever company name you want. And we're going to name this case 01-your name. Okay, you don't have to put, don't worry about like a student ID number or anything like that. Just your name will be enough. It's a small enough class that I know you guys. I know your names. And then, so that's 1A. And then we're also in 1A going to change our tax form, if it's not already changed, to a corporation with 1 or more shareholders, which is a form 1120. So mine is already set to that. But if yours was on something else, you could come in here, click that, and hit save. So that was 1A, parts 1 and 2. So now we're going to go to 1B, which is sales. So we're just going to come over to the sales tab. And it says turn on track inventory quantity on hand. So if I find inventory quantity on hand right here, you'll see it's already on mine, and it probably is on yours too. If it's not, you just hit edit and you turn it on by clicking that. 1B, expenses. So we're going to click the expenses tab, and it says we're going to turn on track expenses and items by customer. That's 1BC1. And you'll see if I look at track expense items by customer, that is already on mine. We're also going to go turn on make expenses and items billable. So you can see it's actually off on mine. So I'm going to click here to edit. I'm going to turn that on. And then it says no markup. So I'm not going to click the markup. I'm going to leave that blank. Track billable expenses and items as income in a single account. So I want to make sure that's clicked and in a single account is clicked, and no sales tax charge. So we're not going to click charge sales tax. And then item 3 under expenses, default bill payment terms, net 30. So we'll choose net 30, which means that we expect our customers to pay us within 30 days as a default. Of course, we can always alter them for an individual customer if we wanted to later. We'll hit save. Under payments, we won't make any changes. So under the payments tab, we leave that the same. And then this last one's a little confusing because it says E advanced, and then it says time tracking, but we're not actually going to go to advanced. We're just going to go to time for time tracking. And we're going to turn on add service fields to timesheets. And you'll see in mine, it's already on, which is, it's just called show service field. Again, if they're off in yours, you would just turn them back on like that and allow time to be billable, which I think the book makes it sounds a little different. It says make single time activity billable to customer. That's the same thing. So just turn that on. Okay, we're going to hit done. So I'm going to hit save. I'm having some sort of problem with QuickBooks here. I think it's, let's see, we'll hit done. Okay, so it was just being a little weird. I think it's probably because I've been messing around in these company files a little bit, and it was recognizing me as having worked on a different one earlier. But okay, so once we save that, now we're back to our main page. So that was 1A, right? B, C, D, and E. So we completed those items. Now we're going to go to 2 and create new accounts and related beginning balances as follows. So to create new accounts, if you'll remember from the walkthrough, we come up to the little settings gear, and then we go to our chart of accounts. So you can see right now, none of my accounts have balances because this is a new company. And these are the accounts that were kind of automatically set up. So again, if you remember back in the walkthrough, I had said that QuickBooks sort of changed its look a little bit. So when we add these accounts, you'll see that new look. So I'm going to go ahead and add a new account. And the first one is a bank account. So banks. And we're going to save it under bank accounts. And then we're going to call it checking. So the detail type is not, there's not a detail type thing in the new, this new interface with QuickBooks. So it can be a little confusing. We'll leave description blank, and then we want to have a balance of $25,000 as of 12/31/2017. So I'll select another date, 12/31/2017, and $25,000. And we'll hit save. So now you can see I have my checking account in here. And you'll also see that QuickBooks added that $25,000 to opening account or opening balance equity. What that means is you can't really just, in accounting, you can't just add $25,000 to checking and not say where it came from. Remember that when we have assets, they have to equal our liabilities plus our equity, way back from accounting class. And so when we added that asset to our checking account, QuickBooks added it to an equity account called opening balance equity, or meaning as of the date we started tracking this company, 12/31/17, probably started tracking it on January 1st of 18. But as of that date, we had $25,000 in our checking account, and it's in this equity account that's undefined as of yet. And so they're just calling it opening balance equity. Okay. Next, we're going to add some fixed assets. So I'm going to show you how I do fixed assets in real life, even though it's not super clear in the book, but I think this is the easiest way for tracking them. So I'll show you. I'm going to create a new account called assets, and it's going to be saved under fixed assets. In our tax form selection, it lets us choose a different type. So we're going to call it furniture and fixtures. And then I'm going to call this account furniture and fixtures. Actually, I'll use the and sign. like that. I'm not going to add any balance to it because I'm going to do the original cost and depreciation accounts as sub accounts to this main account called furniture and fixtures. And this is the kind of thing that this new change into it is put in. If I was in business mode right now, business view, I wouldn't be able to do this. It wouldn't allow me to create like sub accounts to add to. And their intent behind doing that was so that business owners couldn't create a bunch of crazy accounts, but would be forced to do their entries within the existing accounts that they set up together with their accountant. So that's why I'm in accountant view. And that's why I'm going to create this sort of, I call it like a base account for furnitures and fixtures that I can then add my my original cost and depreciation sub accounts to. So I'm going to hit new, do another asset. And now when I hit save account under, you'll see that I have this furniture and fixture account available under fixed assets. And this account name, we're going to call original cost. And now this will have a starting balance as of 12/31/2017. And that balance was $40,000. I'll save it. Under the old interface, you could just say there's this much depreciation and it would like set it up for you. Okay, so under this, we have to kind of create this furniture and fixtures account and then do the original cost and the depreciation sub account. So we're also going to set, so this is an asset. We're going to set it up under furniture and fixtures. Under tax form, we're going to call it accumulated depreciation. And we're going to call this one depreciation. Starting date, you guessed it, 12/31/2017. And the balance as of that date was $10,000. So here's the other thing. We're going to put this in here as a negative 10,000. Why? Because accumulated depreciation reduces the amount of our overall asset. It doesn't really reduce the amount, but it's the amount of that asset that we've claimed as an expense. And so this will allow us to show our book value of our asset. So when I hit save, I'll show you. Actually, it didn't do it that way. So I guess we're not going to do it as negative. When we tried it earlier, it did something weird. So scratch that idea and don't put it as a negative. QuickBooks is smart enough to recognize it has that QuickBooks, or that accumulated, or the depreciation account should be. So we're going to have to fix this, and I don't know if it's going to let us do that from here. So we need it to let us see the whole entry. There, it lets us see the whole entry. So we want the depreciation account to actually have a $10,000 credit account and the opening balance equity to have a $10,000 debit. So if we don't put a negative when we create that, then we don't have to do this little journal entry. This was me thinking it needed us to do that. But I'm going to hit save and close. Yes. And now, when we go to our chart of accounts, it should show under furnitures and fixtures that it has a book value of $30,000, which is based on a $40,000 original cost and a $10,000 accumulated depreciation. Okay. Now we're going to create a new long-term liability account called notes payable. So liabilities. We're going to save this under long-term liabilities. Notes payable. The account name will be notes payable. We're going to choose an other date, 12/31/2017, and a balance of $60,000. Finally, we'll create an equity account called common stock. So choose equity. You'll notice it doesn't give us the options of common stock in here. So we're just going to click equity. The type is common stock, and then we'll call it common stock. Because we're not saving it under common stock, we're actually saving it under equity, and it's an account called common stock. Starting balances. Remember, common stock is just money that the owner put in at the beginning of the company's life. So we're going to say this had a balance as of 12/31/2017 of $1,000. And there we go. So now our blank company has some things going on. It has $25,000 in the checking account. It's got $30,000 worth of furniture that we paid $40,000 for and depreciated $60,000. I mean, $10,000 to give us a $30,000 total. We have $60,000 in notes payable, so debt that we owe. We have $1,000 in common stock, money that was put in by the owners, and then we have negative $6,000 in opening balance equity. So that is money so far that that hasn't been categorized. It was just part of all those opening balances. All right, so we're on to step 3, which is to create 2 new products and 1 new service items as follows. So if you remember, to create a new service product, we click the gear and go to products and services. Then we click new, and the first one is I think we're gonna do these as inventory products. The first one is called Rook 15. We don't know the SKU, we don't need it. Under category, let's see. You read through the whole thing here. So we're just gonna, I think we'll leave category blank for a minute and we'll fill in the other information we know. So it is an inventory asset. So we know that our initial quantity on hand, this is all part of step 1 still, is 10 as of 12/31/2017. And we're not going to put in a reorder point. If we did, that would tell the system, let us know when it's time to reorder more of these. Our price is $650. That's how much we're going to sell it to our customers for. Our cost is $400. Then it says our income account is going to be called sales. So here we have sales of product income. So we need to add a new one just called sales. We'll save and close that. And then our cost account is called cost of goods sold. And we will save it and add a new one. Our second one is called the water hog. And our initial quantity on hand is 8 as of 12/31/2017. It's an inventory asset. Our sales price on the water hog is $860. Cost is $500. We're going to use the income account sales, the one we just added, and the expense account cost of goods sold. And we're good. So we will save and also create a service account called consulting. It doesn't like my date. There it goes. All right, so we're going to call this one, this is part 3B, consulting. There's no quantity. Oh, you know what? I have to change the type. It's not an inventory account. This is a service that we're going to call consulting. We're going to say I sell this to my customers. Let's see what else it tells us. It's a $25 sales price. Our income account is called services, so that's already in there. All right. That's confusing because we already have services. But I guess if we didn't, it tells us how to add a new one if we needed to. I didn't add that, so that's already in there on mine. And I'm going to unclick that because we don't purchase it from a vendor. It's just something we sell to our customer. And that's it as far as my new service products. Now you'll see I've got my consulting service and then my Rook 15 and my WaterHog. All right. So part C, make changes to the following accounts via a journal entry as of 12/31/17 with an offset to opening balance equity. So now we're going to tell QuickBooks, hey, accounts receivable, we owed money. We were owed money by our customer Blondie's boards. Prepaid expenses, we had paid for some expenses in advance. And accounts payable, hey, we owe money to our vendor Channel Islands, and they're new vendors, so we'll have to create them. So I'm going to come over here, and it says to do this with a journal entry. So I'm going to create a journal entry, and then I'm going to put the date of it as 12/31/2017. So the first one is accounts receivable. You'll notice I don't have accounts receivable, so I'm going to add it as a new account. We're going to add this as an accounts receivable account. And that's good. Accounts receivable is an asset, so if we're adding some, we're going to debit that account. And then the name is Blondie's boards. I don't have any other info on Blondie's boards right now, so I'll just hit save. All right, so debiting accounts receivable is telling QuickBooks, hey, I have $5,000 owed to me by my customer Blondie's boards. Next, prepaid expenses, which is already in there. That's going to have a debit because it's an asset of $3,000. And that's not from anybody, so we don't need anybody else. And then accounts payable. Which we'll have to add new. What type of account is it? It's an accounts payable account. And so we're good there. And that's 4,500. And that's money we owe to somebody. So the question is, who do we owe? Well, we owe a vendor. Come on, QuickBooks. So not a customer, but a vendor called Channel Islands. Again, don't know anything else about them, so I'm just going to leave it like that. All right, so now you'll notice that my debits and my credits don't add up. And back accounting 101 is that your debits and your credits always have to equal each other. So this is what it means when it says, create this journal entry with an offset to opening balance equity. So I'll type in opening balance equity. And we're going to be crediting opening balance equity $3,500. So what that means is, again, since we're entering something from the past, when we started tracking this account, that we added $8,000 in assets, but only $4,500 in liabilities. So the additional $3,500 has to be somewhere. And the answer is it's in an equity account called opening balance equity. Okay, so that's what we're doing there. So I'm going to hit save and close, and there was my journal entry. So that was the end of step 3. So now step 4 is for us to close the opening balance equity account to retained earnings. So in order to do that, let's go to our chart of accounts and find out what the balance of our opening balance equity account is. So opening balance equity has a balance of $5,500. So to close that account, we'll have to do a journal entry. The question is does that have a debit balance or a credit balance? And again, you have to know enough accounting to know if a equity account has a positive balance, then it must be a credit balance because equities increase on the credit side. And that's a little bit of review from accounting that a lot of us, maybe don't remember. So now I'm ready to do my journal entry. And we'll date it 12/31/2017. And our retained earning, our opening balance equity had a credit balance of $5,500. So we're going to debit the account $5,500. And it says to close that to retained earnings. Let's see. It's faster to type it, instead of looking for it. There it is. So what we're doing is taking the balance of opening balance equity to 0 and increasing retained earnings. I'll close it. I can double check by looking at my chart of accounts and seeing that opening balance equity now has a balance of 0. So we're in good shape. All right, so we're on to step 5, prepare and print a trial balance report as of 12/31/2017. So we're going to go to reports. We are going to choose a trial balance, which we can either find by searching or by just, scrolling down and looking for it. Probably faster to search. And then we're going to do a custom date, which is going to be 12/31/2017. It's a little bit misleading to have a from and a to on a trial balance because trial balance just shows the balances as of a certain date. So there you can see we have a nice check. We can see that ours matches up with the one on the screen, which is awesome. It means we did it all right. If your trial balance differs, then you need to make sure all of your changes were dated there. If you use today's date, they won't show up in your trial balance. Or you can click on these balances that are off and go and look and figure out why it's wrong, right? It'll actually take you to like the transactions for that chapter, or not that chapter, but that entry, okay? And then you can ask me for assistance if you still can't figure it out. All right, so we're gonna export. All right, so you don't have to print this. It says to print it, but I don't see wasting paper as being anything valuable. Anyway, but here's how you're going to turn it in. You're going to export your trial balance to Excel and save it with the file name, your name, chapter 3, case 1, trial balance. Okay, so to do that, to export it, You do it like that. It spits it out right there. And then that file, you can open it in Excel if you wanted to, change the name, or you could just, you can also, in Windows, just open it in the folder and change the name of it right there. And then you're going to submit it by going into Canvas, going to the assignment in Canvas. So here's the chapter 3 case assignment. And on mine, it says download. On yours, you can actually upload it, right? And you'll just upload that file right there. And then you'll move on to prepare a transaction detail by account report. So we can go back to our report list. We can type transaction detail by account. And then we will put the dates, which are 1/1/2007, 2010, and 12. We'll run the report. We'll make sure all of our dates are 12/31/2017, because that's the easiest error you could have made along the way. Save it as a customized report so that you'll be able to do this in the future. Okay. Then you'll check and make sure it all matches up and works. Make sure all your changes were dated. Click on the lines that do not match and figure it out, what's going on with it. If you still need help, ask me. And then you're going to export this one and upload it in the same way. So that's how you do the case assignments. Like I said, in the future, we won't do as much of this walkthrough because the case is supposed to be your chance to sort of show what you're doing. So it's kind of like an open book test. Anyway, but I just wanted to walk you through the first one because it's a little new and can be challenging. So I hope you have a great week, and I hope this was helpful.